Hello guys, welcome to Ice OpeningFX YouTube channel. Today I'll be talking about what we call a base candle and how you do take your confirmation entry from your point of interest. Now let's take for example, we have a higher time frame view based on structural and inducement theorem. So let's say for example we are bearish on this particular pair on higher time frame, and you have your primary zone, and your primary zone should be let's say for example from this very zone to this area is your primary zone. Within this primary zone you are able to look for your last area of mitigation so that you know your value point of interest, because around this area this is where you don't look for inducement. Around this area the only area you are supposed to look for inducement is where we have what minor break of structure. Below it is where you look for inducement. Then here you use what you can easily use liquidity and mitigation to define your what point of what interest. Now let's take for example you have your higher time frame point of interest around this very area. So if this is your point of interest here, now as markets are approaching that point of interest, as markets are approaching this point of interest, now as market approach that point of interest, you have, let's say for example, your major structure to the upside as is giving us a pullback to the what as a corrective wave to the point of interest. So you have a little range structure. As market is forming this range structure, once it would trade into that particular point of interest, we do what expect what we call intent at what point of what interest. We do expect what we call intent at what point of what interest. So intent, this is what we call a break of structure at what point of what interest. A break of structure at what point of what interest. That's why we call it intent. Now, most times we don't only take it as what breaking only one range structure. Most times we do expect it to like grab the whole range structure around this area, grab the whole range structure before we expect it to form what we call a shift of structure. Then as our entry level around this area for market to shift to the downside. There is supply taking charge in the market. So this is how we treat it at what point of what interest. So one thing about market is you must have what your normal idea on how you face the market. Market is what the greatest teacher is. The greatest teacher. When you give time, when you give it time, it will what teach you many things that you don't know. Seriously. Now let's take for example, you have this area as your point of interest, and as market is approaching that very area, is giving you a kind of a higher high, a deep higher low, give you a higher high, a little range structure. And once you trade into that zone, you wait for what? A little what? Intent break of structure. When we make intent, and there must be what? A complete mitigation, so that you will not see a range structure forming another range structure as what BMS. So you must have what a complete what idea of that mitigation around this area before you call it what a break of structure. You expect what RTU to what this area that's a return to what source area before you take your entry. Then here for continuation. Now there's still another area whereby you can expect a little short sell for a corrective wave. As market is what giving us a corrective wave. That's what we call base candle. A base candle is basically before market break a major low, as it's approaching this what? This low, this structural low, protected low, as it's approaching this low. Now, once market is approaching this low was able to create a little pullback, not a major pullback, a little pullback as a base candle. As what? A base candle. So this base candle on lower time frame, you can still see what we call entry confirmation around this area. Then you wait for a short BMS, then a long sell to what mitigate the former structure around this area. So without that intent, you don't wait for what? You don't look for what? This corrective wave. But once market provide it at that particular point of interest, you can easily wait for this short sell. So mostly this base candle is not a major internal structure. It's not a major internal structure. When we are talking about internal structure, I believe if you have been following me here on YouTube, you must have understand everything about internal structure. So that is that. So if this is not a major internal structure, this is just a base candle, a candle that respected is very low, like the SC or a particular point of interest, like our proportion block, respecting mostly the proportion block. When it respects the proportion block, this is when it happened. But if it didn't respect the proportion block, it respect what we call SC, that is sponsored candle. It might price might not use it, price can fail. But when it's a proportion block, now because proportion block has more demand in it, it has more demand and a lot of order on it than normal SC candle. So when it has this, then it can easily push price to create a lower low. It can push price to create a higher low. Sorry, it can push price to create a higher low. So this is a good point of interest you can use to trade electrocorrective wave for market to create a higher low. For market to create a higher low at what? So as market is approaching that zone, this is what you look for. This type of move here. This type of move here. So now, as market is approaching your higher time frame point of interest, last area of mitigation from a higher time frame. Now, as market was buying from here, creating series of higher high, higher low, higher high, higher low, higher high in terms of structure, higher low. Now, it got to this very point, it stopped the mitigation. As it stopped the mitigation, so that means this low can easily become your inducement leg. So if this low is your inducement leg, now your general idea is that before it breaks this area, that means this area can easily push price to create a higher high. This area is supposed to push price to create a higher high. That area can push price to create a higher high. That means if this high failed to create a higher high, you can easily see that this is where SMS happened. This is where SMS happened. So now, this was an SC candle, a sponsored candle that's supposed to push price to create a higher high. But market is already at our higher time frame view, and it gives us this intent around this area. That means range structure BMS. Then after that short-term range structure BMS, it got to our SC last area of mitigation from this buy move, where you can easily take a short buy to continue to take this this high. If let's say for example market is from higher time frame is bullish, this is what we have expected here. So as market approach that very level, and what you expect market now is this intent. So after this intent, you expect is sell. It gave us a short sell, a little buy to mitigate this former zone. So it gave us an SMS. So as it gave us this SMS, that means this area was able to push price a little to create a pullback. Now before breaking the low of this SMS leg, the SC on lower time frame, the SC here was able to create a base candle, which is this candle here. It was able to create a base candle. It was able to create a base candle. Now, since it was creating a base candle, you have pure inducement here. You have your pure inducement around this area. Because after market left this range, it just continued creating a range structure without proper inducement into this range to touch any of this former zone. So it left that zone unmitigated till it broke this low here. So as it broke this low, you will do expect market to create Firstly, it will create that inducement. So it first creates the major inducement leg here, which is this very high. Now, what did he use to create that inducement? The base candle. The base candle. So as it creates that base candle around this area, it gives us a little minor break of structure at time frame at that base candle area, which is your intent. So as it gives us this intent here, we have intent here. Have intent here. We have intent here. So since we have these two intent, now as market break this structure, even if you didn't kind of want to enter from here as a sniper entry. Now let's say for example you do a little refinement, you're able to have a little risk to reward ratio from this higher time frame, then targeting your next low, which is this perfect low, as your liquidity, external liquidity being taken. So targeting this low. So even if you didn't enter like this, now you wait for what? A BMS, ROTO, internal structure continuation was here. Internal structure continuation was here. Now in our model, there's always a reason why price will come and induce liquidity. It's not always that it will come and induce liquidity. There's always a reason. So without that reason, market will not come and induce liquidity. So because there's no reason here for market to come up to induce any liquidity to the upside, you will just expect market to create simple lower low, lower high, simple lower low, lower high around this area till it get to what that next inducement level, which is around this area. Firstly, it was what around this area. So which is perfectly, you can easily take the TP1 around this area. The TP1 around this area of this range. So once you take your TP1 around this area, market was able to create a little pullback into this area to mitigate this former zone. Then after that, your next TP is what? This low. Your next TP is this major low here. So as you have this low as your next TP, then after that, you know here we have what we call a proportion block, which was around this area on M1. Though we talk more about that maybe next time. So because of that, boom, you have it at point of interest. You have a lower low, a lower high. You have what we call intent around this area, a minor break of structure at your point of interest. So telling you that you are ready to induce this very high because it has already induced liquidity. Firstly, this one and the one created. Firstly, this one and the one created. So since it has already induced liquidity in the downside, it will go and what? Induce liquidity in the upside. To go and what? Induce liquidity in the upside. So as it's coming again, this base candle that held price to create this short sell will not hold price again because market has already mitigated. So above it, of that SMS leg will become your what? SC. Since this is SMS, that's a shift of structure. A shift of structure. A shift of structure means when market failed to make a higher high, it shifts from creating a higher high, it creates what? A lower high. That's what we call what? A shift of what? Structure. Now, since that is your nearest zone, and we have what we call intent around this area also. Now, your last area of what? Mitigation on lower time frame, which was around this area. You can easily see this candle. Yeah, a lower low, a lower high, a lower low. So this very candle, what market created here is it created a lower low, a lower high, a lower low, a lower high, a lower low, a high, a higher low. So this zone, this very candle, this SC candle was able to push price to create this one. Then this one is the supporter of this one, which is not the major candle. It's not the major zone here. It's not the major zone. Proper mitigation here. So this very white candle here is your nearest what? Mitigation candle. Is your nearest mitigation candle. So since that is your nearest mitigation candle, your next idea is what? Targeting firstly this high, this liquidity high, which is your what? Inducement. So as you're targeting this high, your nearest target again is for market to take that base candle that created what? That pullback. That created this first sell move here. Because market will always try to take people out. So you have to think like a smart money trader. You have to think just like that name implies. You have to think like them. So now if this is your what? That base candle, market will take it out to what? Induce liquidity on lower time frame based on what market form on this range. Based on what market form on this range, this base candle is what? Still what? Inducement. It's still what? Inducement. Despite the fact that is what? It's a base candle. It's still what? Inducement. Then you use what? The primary zone of this range. So the primary zone of this range formed, we had a higher high, we had a higher low, had a higher high, we had a lower low, a break of structure here. A break of structure here. The break of structure that happened is this. This one was able to grab liquidity already. It grabbed a little range structure here on M1. So that means it's properly mitigated. Create a higher high, higher low, a higher high, a lower low. As it creates this lower low, it gives us what a break of structure here. So as it gave us this break of structure here, the next thing you are waiting for is what your last area of what mitigation, which is this very candle here, as a what SC candle. The last area of what mitigation. This little high here plus this acting as what liquidity. This little high, this single high here, acting as what your liquidity, single liquidity. So boom, you take a short from because of what your point of interest to create a lower low. That is to break what this low. To break this low. This is simple setups that occur every day at your point of what interest. You can easily wait for this. Perfect and simple. You always wait for your primary interest, primary point of interest. Then after that, since you have gotten that what intent, which is this, at point of what interest. Yeah. Since you have gotten this is your what your nearest low. Then from targeting this nearest low, you can easily note your higher time frame inducement level, where market will sell into before it will give us another deep corrective wave. Because without an inducement level, market will not give us a deep corrective wave. So till it get to that very level before you expect what a deep corrective wave. But based on this time frame, this is your what your low. So this is your nearest liquidity. This is your what your nearest liquidity. This is how you tackle your what your structure, liquidity, and inducement. So don't forget to share the link and don't forget to subscribe. Good luck. Good trading.